This indicator predicts the exact future of the chart, and it's amazing. One day I was looking through the public library of indicators on TradingView for fun. Yeah, I search trading indicators for fun. I have no life, guys. But while I was doing this, I stumbled upon an indicator that claimed it could predict the exact future of the chart. Just as you are. I was intrigued. Here it is. This indicator is found on DERIV TradingView platform. I know it's very amazing and you are very eager to know how it works. I know you all know the MACD. Did you know that you could use it to determine your future trades? Stay with me here and you will get to know how. When I first saw this, I laughed to myself thinking, wow, real cool. But then a couple hours passed and I looked back at my chart and I saw the price followed the exact movement of the projected bar candlesticks on the MACD. I mean, the indicator direction was literally spot on in its prediction. I was instantly amazed, so I tested it and cooked up a beautiful strategy using this indicator. And let me tell ya, it works amazing. First things first. You need to get to the DerivTradingView.com. If you don't yet have it, I'll leave a link in my description. So when you open, you will find yourself to Volatility 25 index is shown. Go to the Indicators tab and type MACD. What an indicator! I have really come to love it. Despite that, we will add another indicator later just for confirmation purposes. For this, it's the most important. This is the first main indicator we will use. After that, move to the timeframe section and change it to 1 hour and let's see. Once you do this, the indicator will be added to your chart. I hope we are all together in this, so listen careful not to be left behind as we proceed. And that's exactly why I'm making this video. To share it with you. I know I'm amazing. Let me have some clap for myself. So back to the chart. Here are the main settings. When you arrive here, you will find this setting inputs. This numbers you will have to put is how many candles the indicator will calculate. For the fast length, as you can see it, make sure you put 144, then when you go to the second length and put 25, then finally below on the signal line input the value 10. And from there press OK. Even though this indicator is amazing, you probably shouldn't use it by itself. As just because happens in the past, doesn't mean it will happen in the future. Remember, this is synthetic trading. So when this is done, know that it will look at the past candles and go through the entire chart history and try to find another pattern that closely resembles the one that is currently being provided. As what happens in the past is likely to happen in the future. And as you can see, it works pretty damn well. But as I said earlier, there's a little bit more to it. So we have to add a little bit more to this strategy so it raises the success of this indicator. Go back to the Indicators tab and type in McGinley Dynamic Indicator. Make sure you add this one, right here. Go to the settings of this indicator and ensure the length to it is 14. Then zoom out both the MACD area and the market area for easy visibility for you to see the flow of the chart. This is just a type of moving average that was designed to track the market better than your typical normal moving average. So those are all the indicators that we need. Now let us go over the juicy strategy. But first, if you are watching this and you not subscribed, please consider doing so. Okay, so let's go over the strategy. So for a long trade, you are going to want this exact configuration. First, you want the projection of maybe let's start with the green bar candlesticks in the MACD area to be heading upwards. With this, your entry should be a downtrend. Then the opposite happens when you see your red bar candlesticks heading downwards on your MACD area. Take a good buy. All this should happen when still observing the McGinley dynamic, and this should in case taking a buy. Let the indicator now on your chart be below the candlesticks, and the opposite for considering a sell. Let the McGinley dynamic on the chart be above the candlesticks. And with that said, you can now start practicing on your side and comment below what are the results. Please use your virtual funds for practice before you get into the real funds trading. And I am pretty sure when you will have a test of it, you will be on profits, having some dollars after flipping your account as you wished. You're going to set your stop loss right below the recent low of your candlesticks in the chart area, and you're going to set your take profit at a recent high. Make sure all those conditions we have talked about are well met, please. You can also consider using other indicators under your concern to make sure you have no fear of missing out. If all these conditions are met, you can enter a trade. And just like that, you have a winning trade. But there is a common problem using this strategy. Just small one, but you don't have to worry about it. since I will share what I normally do to maneuver it around. I want you to understand this: when you apply all these indicators, you may see as if the indicators seem to be lagging indicators, but that could be due to use of different time frames, so I always advise for someone to take trades using the 15 minutes chart. This 15 minutes chart has different advantages, that's why I recommend one to use it. The 15-minute time frame offers a good balance between short-term noise and long-term trends. It's detailed enough to capture significant price movements without being overwhelmed by minor fluctuations. Many traders find the 15-minute chart to be a practical timeframe for their trading style. It allows for multiple trades throughout the trading day without requiring constant monitoring. The 15-minute chart is versatile and can be used with a variety of trading strategies, including trend following, breakout, and mean reversion. Many markets have good liquidity on the 15-minute timeframe, which means you're more likely to find suitable entry and exit points. Compared to shorter timeframes, the 15-minute chart can help reduce the emotional impact of trading, as you're less likely to be influenced by short-term price swings. Remember, while the 15-minute chart can be a great choice for many traders, it's essential to experiment and find the timeframe that best suits your trading style and risk tolerance. And again, just like that, you have some easy profits. I think this indicator is amazing. Try it out for yourself and let me know how it works for you on the comments section. Next, we will look on some strategies on trading digit market contract types, either even/odd, over, under, or matches and differs. Please recommend which you would like us to look at. Anyways, with this it will open your eyes on how to trade correctly. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe to my channel for more trading tips and strategies. And don't forget to share this video with your friends who might be interested in learning about trading. See you in the next one.